Family, I am going through it today, but I'm persevering. I am blessed. I'm highly favored. And I'm doing my very best not to complain. Not to complain. But yeah, man, I'm going through it. So today's video was based on a conversation I had with a guy last night. And it's concerning taxes, right? Just simple taxes and when they're due. And he was amazed, said he's been, it's an older gentleman, said he's been filing taxes for, decades. And he never heard anyone say that taxes were due every quarter. So I'm here today to tell you taxes are due every quarter. This young man did not believe me. I had to send him IRS proof of this. And so I'm going to do that for you today. But on top of that, I'm going to also send in the link some other IRS deadlines, because there's a bunch of them, right? But today I'm just going to talk in a video about taxes. So most people don't know that taxes are due every quarter because they're used to paying taxes out of every paycheck, okay? But taxes are actually due every quarter. And so what that means is that all the money that you made between January 1st and March 31st, the taxes on that income is actually due on April 15th of 2019, okay? Now, all the money that you made between April 1st and June 30th, that money is due July 15th, okay? And then the same goes for all the money you made from July 1st all the way through September 30th is due on October 15th, okay? And then, so on, January 15th, okay? Now, why is this important? It's important because if you are receiving, let's say, Social Security or retirement, right? Something outside of your regular job, then you have income that's coming in, right? But not necessarily getting taxed. But the taxes are due every quarter. And if at the end of the year you wind up with a balance due, then you're going to be penalized for not paying your taxes on time, even though you're paying them before April 15th deadline. Does that make sense? It's called an estimated tax penalty. If you have taxes due on April 15th of 2019, you will pay an estimated tax penalty because you did not pay your taxes on time because you were supposed to pay them every quarter. And you didn't do that. That's why you have a balance due. Okay? Mr. Ross, you want me to bring you on or no? This also comes into play when you talk about investments, right? So there's a lot of people that have investments, or maybe they have some type of retirement plan where they have capital gains and dividends and stuff like that they're receiving. Well, taxes are due on those things, and those taxes are due every quarter. And so it's up to you, the taxpayer, to determine how much tax that you have to pay on your income. All right? I talk about this stuff all the time. When you have a utility bill for, $78.13, most people pay $78.13. But the reason why is because the utility company is calculating that bill for you. And they're just sending you a bill in the mail and then you're paying it, right? Taxes in America work completely opposite, okay? You, the taxpayer, have to calculate your own taxes, and you send your tax bill to the IRS, okay? Now, think about this for a second. When you receive a utility bill, as long as it's not too high, you don't have any problem with it. You probably just pay it and you don't even think about it. Do you calculate your own utilities? Probably not. Probably not. You just pay whatever the light company tells you to pay. And as long as it's not too high, you pay it, right? Okay, well, taxes work the same way. When you send your tax bill to the IRS, the IRS looks at it and says, oh, no, that's too low. That's too low. let's get them on the phone right now, right? That's a problem. No, that's not right. So, again, as long as the taxes that you pay to the IRS are reasonable, then the IRS doesn't bother about trying to figure out whether or not you owe any more taxes, right? It's only when you don't pay enough taxes that they say, oh, well, this don't look right at all, and they come after you. So that's the way it works. So remember, you're responsible for calculating your own taxes. I will send with this video a link to the IRS W-4 calculator, the W-4 online calculator. And I'll also send you instructions on how to calculate your current year income in order to use the calculator. Okay, the calculator is going to ask you what your 2019 annual income is. Well, it's March of 2019. How do you know what your annual income is in March of 2019 for the whole year? Well, it's very simple. What that means is you have to predict it. Okay, how do you do that? Well, you simply look back over the last 2 months, January through February, add up all your income from all your sources, and multiply that number times 6. That gives you 12 months of income. Now, is that number going to be perfect? No, it's not, which is why it's very important that you recalculate your taxes every quarter, okay? I'll send you dates on when to do that stuff. April 1st, what did I say? April 1st, July 1st, October 1st, and January 1st. Is that right? I think that's right, yeah. April 1st, July 1st, October 1st, January 1st is when you need to recalculate your tax bill, okay? And so like I said before, if you have a job, that's done through a W-4. If you're on Social Security or some type of retirement, that's done through a W-4V. I've discussed that before in a video. So again, guys, taxes are due every quarter. Now, why is this important? All right, I have a client that makes a substantial amount of money, and it makes more financial sense for this client not to pay taxes out of every paycheck. Think about it. If you're paying $500 out of every paycheck in federal taxes, what that means is in the matter of 3 months, which is a quarter, okay, you have $3,000 that you could have kept in your pocket before paying the IRS. It makes a lot more sense to use that $3,000 to make more money and then pay the IRS. Why are you giving the IRS an interest-free loan on money that you don't owe them? That's like paying your light bill 3 times a month when it's only due once a month. Makes no sense. Why would you do that? And so, again, like I said before, if your federal withholding is like $20, then okay, yeah, it's not worth it for you, right? But if your federal withholding is in the hundreds of dollars, it makes a lot more sense for you to keep that money in your pocket, use that money to make more money, and then pay the IRS every quarter. You can simply send them a check, or you can do it with your W-4 every 3 months. You can have enough money withheld to pay the IRS every quarter, okay? That way you don't have to pay a penalty. Now, if you don't mind paying the penalty, which isn't a whole lot, you know, the penalty is a small percentage of the total amount of tax you owe. I just had a client, they owed like $7,000 and change for the tax. Is it 7,000? Yeah, they owed $7,000 and change for 2018, and their estimated tax penalty was $147. It's not a lot of money, but think about the amount of money that you can make with $7,000 over the course of a year. You can make a lot more than $147. I mean, hell, you can put it in the market and get at least 10% on that money, right? So it makes more sense for him to not pay taxes at all during the year and to pay the taxes at the end of the year and just pay the estimated tax penalty, okay? So this is part of money management. This is part of just making smart decisions. This is part of financial literacy. It's like someone asking you, do you want to pay $10 for a can of Coke or $1 for a can of Coke? Just common sense tells you to pay $1 for a can of Coke. So this is also common sense. If your withholdings are a couple $100s, it makes no sense at all for you to withhold them out of every single paycheck when it's not due until the quarter end. So there you go. From me to you, I holla.